It began with silence and eerie calm that hung over Wall Street like the stillness before a storm. The year was 1929. The streets of New York glistened under the golden autumn sun. Brokers smiled. Newspapers celebrated endless prosperity. And America, flush with optimism, believed the future could only go up. But beneath that optimism, something darker was brewing. Invisible threads of greed, speculation, and blind confidence were slowly tightening around the nation. Yes, economy threads that would soon snap with a force that would echo across generations. For nearly a decade, the 1920s had been a dream, a glittering illusion of wealth and endless opportunity. Factories roared with production, cars rolled off assembly lines by the millions, and radio waves carried the voice of progress to every American home. The stock market wasn't just an investment platform, it was the new religion. Every man, woman, and even college student wanted a piece of it. Prices soared, fortunes multiplied overnight, and those who missed out were labeled fools. It was the era of buy now, pay later. Margin trading, borrowing money to buy stocks, became the key to fast riches. For every $10 you had, banks and brokers would lend you 90 more. It felt like magic. A small investment could make you a millionaire. The belief was simple. Stocks would never fall. But the truth was far more fragile. The market's foundation wasn't built on solid earnings or innovation. It was built on debt, speculation, and collective delusion. Beneath the polished marble of Wall Street, the machinery of finance was overheating. In the summer of 1929, a few voices whispered warnings. Economists spoke of overvaluation. Some traders sensed the fever couldn't last, but those voices were drowned out by the roar of the crowd. The Dow Jones hit record highs. People mortgaged their homes, sold their farms, and borrowed everything they could to ride the wave. The country wasn't just buying stocks, it was buying dreams. And then, in late October, the dream shattered. It began on a Thursday, October 24, 1929. The day would be remembered as Black Thursday. The morning started as usual, but within minutes, prices began to fall. Not gently, violently. A wave of selling hit the floor of the New York Stock Exchange. At first, brokers tried to calm their clients. Just a correction, they said. Buy the dip. But the dip didn't stop. Panic spread like wildfire. Phones rang off the hook. Clerks shouted. Papers flew, and faces turned pale as millions of dollars vanished in seconds. By midday, the ticker tape the machine printing stock prices was running hours behind. It couldn't keep up with the chaos. Outside, crowds gathered. Thousands stood silently on Wall Street, watching the commotion through the tall glass windows. Rumors spread of suicides, of millionaires ruined, of banks collapsing. The once invincible stock market was crumbling before their eyes. Then came Black Monday, October 28th. The sell-off resumed with ferocity. Billions evaporated. And then Black Tuesday, October 29th, 1929. The day the American dream fell apart. By the end of that day, 16 million shares had been traded. Some stocks lost 90% of their value. Once rich investors were bankrupt. Families lost their savings, their homes, and their futures. The banks that had lent money for stock purchases found themselves crushed under defaulted loans. They called in debts, repossessed assets, and failed one after another. What had been a financial panic became an economic catastrophe. Factories shut down. Jobs disappeared. Breadlines formed in the streets. Farmers burned their crops because they couldn't afford to transport them. The Great Depression had begun. But the story wasn't just about numbers. It was about people, ordinary men and women caught in a storm they didn't create. It was the story of shattered trust. The banker who once symbolized security now became a symbol of betrayal. The broker who promised riches was now silent. Hope had turned to fear. Behind the chaos, deeper forces were at play. The 1920s had seen little regulation. The Federal Reserve, young and uncertain, failed to act decisively. When the crash came, it pulled back liquidity instead of expanding it. The system that had fueled prosperity now magnified the collapse. Banks hoarded cash. Credit dried up. The economy froze. World economies followed America's fall. London, Paris, Berlin all felt the shockwaves. International trade collapsed. Unemployment soared. Political movements rose from desperation, reshaping the global order. Yet amid the ruin, the crash taught lessons that would redefine finance forever. The American government introduced new safeguards. the Securities Exchange Commission, the Federal Deposit Insurance Corporation, and tighter banking regulations. They were born from pain, the kind of pain that forces humanity to rebuild stronger. Still, the question remains, could it have been prevented? Some historians say no. They argue it was inevitably a correction after a decade of reckless speculation. Others believe that better oversight, or earlier intervention by the Federal Reserve, might have softened the blow. But one truth is undeniable. The crash revealed the power of psychology in finance. The stock market wasn't destroyed by numbers. It was destroyed by fear. When confidence broke, everything else followed. Decades later, the echoes of 1929 still resonate. The Great Depression shaped generations, changed policies, and redefined how we view money, risk, and trust. Every modern crash, whether in 1987, 2008, or beyond, carries its shadow. The story of 1929 isn't just history, it's a warning. A reminder that human greed and fear are timeless forces. That markets, like empires, rise not on logic alone, but on belief. And when belief turns to panic, the fall is inevitable. Imagine standing on Wall Street that October morning. The sound of shouting brokers, the smell of ink and paper from the ticker machines, the disbelief in the air as the impossible happened. The richest nation on earth, brought to its knees by its own illusion. It wasn't just money that vanished, it was trust. The trust that tomorrow would always be better than today. In the aftermath, as America struggled to rebuild, a quiet resilience emerged. From despair came reform, from collapse came understanding, and from ruin came a realization. Progress without balance is a ticking time bomb. The panic of 1929 wasn't the end, it was a harsh beginning. It exposed the fragility of a system built on unchecked optimism and speculation. And even today, nearly a century later, the same lesson whispers through every financial boom and bust. Markets don't crash because of numbers alone. They crash because of our dreams, our greed, our fear of missing out, and our desperate belief that the good times will last forever. But history has a way of reminding us. Every golden age has its breaking point. And when it comes, it doesn't whisper, it roars. Thanks for watching. If you found this story fascinating, please like and subscribe for more deep dives into the events that shaped our world.